What is up, YouTube? Welcome back to another post-trading analysis video. I took one trade today, again, a trade on gold, and we're going to pick up where we left off the previous post-trading analysis video yesterday. And I also like to discuss some Bitcoin price action and a trade that you guys could have taken. Okay, a trade that you guys could have taken, and also giving you an idea of when a potential Wyckoff can fill. Okay, because that also happens. Nothing is 100%. Now, to test you guys a little bit, if you're watching my videos consistently, if I go on the 1 minute, okay, if I go on the 1 minute right here, where do you think I would have taken a trade? Okay, there are two areas. There are two areas. So you can just check for yourself in this entire price action, okay? Where do you think I would have taken the trade? You can pause it and then think about it and then watch me talk about it. Now, picking up where we left off yesterday, we absolutely nailed it. Like, we absolutely nailed it. Where I literally, it happened to perfection. I was talking about this range that gold was in, okay? Well, I was talking about this range that gold was in because in general, guys, we're looking for a lower high, right? We're looking for a lower high. We're in the macro distribution. We have a $250,000 short running from right up there, as discussed in yesterday's video. And we broke structure here. So we found the short on the lower high, and then we broke structure again. So what is expectational order flow? Obviously, a lower high for a lower low. We just have to see where the lower high is going to be and when we get the confirmation, you know? So we were looking at this range from a potential distribution perspective. Okay, we were looking at this range from a potential distribution perspective, and we had our range high, we had our range low right here, and then we got that first sweep of the range high. What did price do? Obviously, in this candle that wicked the high and pushed price lower, there is some sort of supply on the lower time frame. You can call it wick supply. It's just you can see that we wicked it and we moved lower, so seller stepped in there, right? And then we got the third tap with the break of structure here as the confirmation, okay? When do you confirm the distribution? In a Model 2, if you break structure from the low between tap 2 and tap 3 up towards the third tap high. So this is the lowest point between tap 2 and tap 3. So pulling our market structure using valid market structure rules as discussed in my Wyckoff tutorial, you would have this. Now, I saw this and we saw some sell side liquidity lows here, making for a nice return to zone. You know, all these sell side liquidity stops can easily get taken on the move down. It's not really any support. And we saw this, and I told you guys that if this happened during London or New York, it's a 100% trade. You can literally go back to my post-trading analysis video from yesterday, okay, and watch me talk about it live. I told you guys that normally you can easily short this. Right here, this is an easy short. You put your stop above the third tap high, and then you target the low. Easy trade. 3 risk to reward. Absolutely amazing. But what did I say? The timing is not good. The entry is 1 hour. It's 1 a.m. On 2 a.m. Asia opens for me. I told you guys it's an hour pre-Asia open. And what Asia likes to do is it just goes up and then it dumps down. This is exactly what I said. You can go back into yesterday's video. Well, look at that. What happened? At 2 a.m., right here, 2 a.m., Asia opened, and then voila. Price went up, took the high once more, creating a Model 1 distribution, and then we dumped down. So that's why I tell you guys to not short a distribution, especially a Model 2, an hour before Asia opens, because what can happen is that the Model 2 gets disrespected and goes over into a Model 1. And that's exactly what happened, okay? We took the high once more during the Asia open, and then we dumped down from here. So where was the short confirmation? Right over here, okay? Right here. Boom. Let me put it in the chart. Right here, if you draw your market structure from the low towards the third tap high, you have a higher low and a higher high. And it didn't break it right here. Like, it wicked it. A wick is not a break. We want a good candle close below it. So it wicked it. That's not a proper break, but then right here it actually broke. Okay, right here it actually broke. And the risk to reward wasn't the best, in my opinion. Like if you enter on the close, your stop needs to go above the third tap high, and then your target is the range low. It's only a 1-to-1. Like that's not good. Okay, so I would not have taken that, especially because the way you came down after putting in your third tap, the way you came down is you left a massive trail of liquidity above you. So I really wouldn't like that to short here, because you could just squeeze up and then go lower again, right? So kind of sketchy. I would not have traded this Wyckoff Model 1, but price did exactly do what we thought it was going to do, right? I think I'm going to cut that clip and post the aftermath. So you came back inside the range, and even here you had a local Wyckoff, right? You had your 1, you had your 2, and you had your 3. Also, if we zoom in, let me explain to you guys that this was a valid Wyckoff in detail right here. Oh, right here. So if you look at your market structure from the top down, you have lower highs and lower lows, okay? Lower highs and lower lows, and then you go up. You go up right here, okay? In a downtrend, you pull your range from bottom to top, okay? Pull your range from bottom to top, put the range on the chart, and then you have your range high, you have your range low, or you have your range low, you have your range high, you confirm the range right here, and then from there you have deviation 1. This is your extreme liquidity. It's literally the last wick on the lower time frame before taking out that high, and that's your third tap. See that? Wyckoff Model 2 distribution. The thing is, you're already on the 3 minute, so if you want a confirmation, you need to break structure, and there wasn't really any structure until right here. And I'm referring to the structure again from the low up, right? So you have higher lows and higher highs right here. Did that take the high? Yeah, I just touched it. And then you go higher. For all the valid Wyckoff market structure rules and you know, the rules regarding a third tap of a Model 2, go watch my Wyckoff tutorial. It's all explained in detail there. And part 2 will go online tomorrow, okay? Part 2 for advanced Wyckoff schematics will go online tomorrow. I've been getting a lot of questions about it, but tomorrow it will go live, okay? So you could have shorted right here and again, and put your stop above the high. And then you can target that range low, but you can target even lower, right? Because you're in the bigger schematic. So this could have been a nice little 3.2 risk to reward trade. Very nice. Like Wyckoff is everywhere, guys. It's on the 1 minute, it's on the 10 minute, it's on the 1 hour. Like Wyckoff is literally everywhere. You just need to know how to look at it. But that was regarding yesterday's price action, okay? Not even yesterday's, like this morning's price action, very early in the morning. So from there, this was still our range, okay? This was still our range, and we had our distribution right here, our 1, 2, 3, and then we swept all liquidity, and we came back inside the range. That was kind of the vibe that was going on right here, okay? So what I saw, right, is I'm still looking for a lower high. Like, I'm still looking for a lower high. I dislike the fact that we already swept all the liquidity on the left and then came back inside the range, because it just gives this potential short POI a less good return to zone, because you already grabbed that liquidity on the left, right? You do have some liquidity right here, which can get swept, but I don't like to short a V-shaped recovery after already sweeping the range low, because you know, it could also turn into an accumulation at that point where the distribution hit its target, and this is your 1, and this is your 2, and this could be your 3. Okay? But I was looking for a lower high, and in general, Wyckoff distributions can go over into bigger, more extended Wyckoff distributions. And this is all going to be explained in the advanced Wyckoff tutorial. Okay? But I was checking this price action right here, and to me, at first, this was just a liquidity sweep. These are just all highs, just pure liquidity. But if I had to draw some sort of supply, it would be this aggressive wick right here. And I'm on the low time frame, guys. Like, I'm on the low time frame right now. Like, I know. But if I had to draw extreme supply within the range, it would be this wick right there. because that pushed price down very significantly, okay? And we have some imbalance and some fair value gaps below it on the low time frame. So from a supply perspective, it looks more like liquidity, but if I had to draw my extreme supply, it would be that wick supply, okay? Now, and the way that price came in to that wick supply is also very nice, because following our structure from the low up, what do we have? We have a higher low and a higher high. You can even say here higher low and a higher high. You wicked the low and then you came back for the high, okay? And then you wicked the high again. So in an uptrend, because from the low up we're trending up, you pull your range from top to bottom, just like this. This is your range. And then right here you have your range high, this is your range low, and this is your first sweep of the range high. So the moment we get that first sweep, all your alarm bells should already start ringing of, hey, this can be a potential distribution in the making, okay? We got the deviation 1, so we came up, got deviation 1, came back inside, got deviation 2. Now we have the potential of a distribution, okay? Now we have the potential of a distribution. Again, how do we confirm a distribution if you break structure from the lowest point up towards the third tap high? So the lowest point between tap 2 and tap 3. This is tap 1. This is tap 2. This is tap 3. This is your lowest point between tap 2 and tap 3. So using the 6 candle rule to apply our market structure, you get something that looks like this. So the moment we break this black low right here, that would indicate a market structure break. And that would also indicate that price, the moment we break that low right there, that would also indicate that price will have a rotation back towards its range low, because that is the target of this distribution, this Wyckoff Model 1 distribution schematic. Now, what happened was we got the break, okay? The reason why I like this distribution more is also because if I pull my volume area too, you can clearly see that all the volume, inside of this range, this being your entire range that we're looking at, but all the volume is in the upper section of the range. All the volume is right here. You can see this volume profile, and you can see that the volume profile is literally above this purple line, and this purple line is your equilibrium, okay? So all the volume is in the upper section of the range. What does this mean? It means that if we lose this volume area low, we can have a very easy rotation back down towards the range low, because there's no volume to hold price up. Like if there's demand but there's no volume, volume indicate buyers and sellers, and if there's demand, it would indicate buyers. But because there's no volume backing up the demand, it most likely isn't that good of a demand zone to watch. So if there's no volume in your lower section of the range, it can just make for an easy fill, okay? It can make for an easy fill. So we got, I call it range inefficiencies, okay? Because even without using the range tool or the volume profile tool, you can clearly see if you look at this range, there's just a massive price action gap right here. There's no price action in here. All the price action is in the upper section of the range. So it just makes for an easy fill, okay? The problem that I was having, I had this distribution, and overall I liked it a bit less just because we already swept that range low if we talk about this bigger range, okay? We already swept that low, so I was like, it is a bit less good, but we do have some liquidity lows right here, and overall I can just scalp it, right? Because the technical target is this local range low. And I was checking it, and the problem I was having is that we got the break right here, but right below our break of structure level, we had this 1 minute demand zone, okay? We had this 1 minute demand zone. Let's make it proper demand. And it was a nice order block, 1 minute order block with some a tiny fair value gap above, order block with imbalance. And we did get the close, but look how shitty the close is, right? Look how shitty. It's like a tiny close, and then the candle afterwards came down, but bounced from demand. So whenever you see that on the lower time frame, it could be a fake break. Okay, it could just be a fake break to tap into demand and go higher. So at the time, I didn't wait for the second 1 minute candle to close. I just entered on the break, but not full size yet. Okay, so I was allowed to enter this trade with 7 lots. And then I added 4 lots on this break. Okay, so it was like 60% of my position was in play for this trade right here. Okay, for around a 1.7, but I knew it could run down more. Okay, I knew it could run down more because it could be an extended Wyckoff schematic. So what happened since then is that I entered short right there, and then price came higher and started farting around in here. Okay, started farting around in there. But what it did is it came for extreme supply. So this is your last high prior to taking the main high, which cannot be taken for our distribution to play out, making this your extreme liquidity point. So it happens all the time where your Wyckoff Model 1 kind of goes over into Model 2, where it takes that extreme supply. You know, it's Wyckoff Model 1s flowing over into Model 2s. Also something I will go over into the advanced Wyckoff section. And how do you confirm the short right there is if you break this local structure. Okay, if you break that local structure from the low up towards that, you can kind of call it like the 4th tap. That's when you can short it. So that would mean right here. Now, mind you, I just had an alert, right? I had an alert for my stop loss, and I had an alert for this low. My idea was, okay, if we break the low one more time, that's when I will add the rest. So I wasn't aware, I was not behind my PC, I was not watching this trade, that like a Model 2 was created, right? A Model 1 going over into a Model 2. So right when we had this break right here, I could have entered, you know, the rest of my position, the other 3 lots. So I was 7 was filled, so the other 3 I could have filled just like this, the range. Okay, and it would kind of give me a nice 2 risk to reward. Now, I wasn't behind my PC for this, okay? My alert went off the moment we took this low again, and that's when I checked, and that's when I saw, oh, this happened. That's actually pretty nice. And I was still chilling in the same position, not adding anything extra. Now, I knew that we had some sort of demand right here. Okay, I knew we had some sort of demand right here and some liquidity right there. Okay, and what price did is we came down just like this. Okay, so we tapped into extreme demand. Okay, this is extreme demand because it's the last demand remaining before taking this low. Okay, even though there was not that much volume, right? Even though there was not that much volume, it was still some sort of demand. The thing that did it for me is that we came down, right? We came down, leaving a trail of liquidity above. So because we also took the main low on the left right here in this V-shaped recovery, I saw the potential of this distribution potentially failing, okay? Potentially failing and just, you know, tapping into that demand zone and going higher. Especially, right? Especially because we have this liquidity that we left above. Like, we came down very slowly, and whenever you come down that slow, it can just have that pop-up effect, okay? It can have a pop-up effect potentially to go lower. Now, what I did is I took a take profit here, okay? So my stop loss was above that 3rd tap high. The moment we had this Model 1 going over in the Model 2, I trilled my stop loss down, only risking like 0.3% of my position now because I was only 0.6 invested. 0.6 risk invested. And then right when we tapped this demand, I took a TP. Okay, I had 2 positions open. I took a take profit out of one of those positions, making my trade fully de-risk. So I took a TP here, and that was the exact same amount of my stop loss getting hit right there. So I had a risk-free trade. Now, we did have supply right here. We had supply right there that we left behind. It got mitigated ever so slightly on the move down. So that's when I just like to pull it up and still call this my unmitigated supply zone. The thing is, we already have a Model 1 go over in a Model 2. So preferably, I don't want to see this again. Like, it would just be a bit too much, you know? Because right here, when that happens, you don't know if this is going to happen, right? So what happened is that price started moving up, sweeping all those highs on the left we just talked about right here before it did this. Now, look at what it did right here. If I had to redefine the supply into this mega supply zone, this 1 minute supply zone that was your Model 2 3rd tap left behind a 1 minute order block, right? Right here. You left behind that 1 minute order block, and that swept the liquidity on the left, and that broke structure towards the downside. So it's an order block on the 1 minute, right? We're scalpers, so we can use it. It's an order block on the 1 minute backed by a Wyckoff, making this your market maker order block, okay? It actually works. So I wasn't behind the PC when this happened. I just had a take profit alert at the range low and a stop loss alert at my stop loss placement above that high. And I didn't witness price coming back for that extreme supply zone again, right? For a very extended, we can, just like this. I didn't notice it came back for that extreme supply zone, really giving price no reason to come higher after bouncing from extreme demand and then breaking structure. Because the moment you close below that low right here, breaking structure, that's when this fifth tap gets confirmed, okay? And that's where I could have added my position back that I took profit right here. So the profit I took right here, I could have added it back, trailing my stop loss from this low or from that high to that high. So I wasn't aware that we got the break right here, and then I got an alert for my take profit. And okay, then I got an alert for my take profit, and I came to the charts a bit before. The thing is, this is a very low time frame Wyckoff schematic, okay? But it's a very low time frame Wyckoff schematic going over into a very low time frame extended Wyckoff schematic where we grabbed all liquidity, right? We had the high right here that got swept on that high. Then this high swept that previous high. Then this high swept the most internal liquidity point, the most internal extreme liquidity point that there is, and that high mitigated the most extreme supply zone that there was. So there was really no reason for price to go higher from either a supply or a liquidity perspective, and then we broke structure. So this right here was our confirmation to add way more to the short, because whenever I see a local schematic really giving price no reason to come higher from a liquidity and supply perspective, it oftentimes has a lot of follow through. And just like your model 1 right here, your 1 tap, your 2 tap, and your 3 tap went over into like a bigger model 2 where you had lower highs and lower highs, the same thing could happen on this bigger schematic that we're in. So this was a 1, this was a 2, and this was a 3 that hit its target. It was a model 1, but then it can come back and create like a bigger model 2, right? Where this entire range can be your bigger model 2 for price to come lower. Like I knew it had that potential. It's like all Wyckoffs flowing over into each other, right? The thing is, I already took profit on one of the 2 positions that I had right here, which would have been no problem if I added it back right there. But I didn't add it back because I wasn't aware of the break. But I do have to take some profits at the range low because that is the technical target. And even though this can be a bigger distribution in the making, it could also be an accumulation with a 1, a 2, and a 3 because we already took the low. Okay? So I had to take profit, like if we clean this all up, because it's getting an absolute mess. Right here, put that range back on our chart. Get rid of the EQ. One tap, 2 tap, 3 tap, and then you just have 2 lower highs. Okay, model 1 with 2 lower highs. And that hit its target right here. This was your range low, and this was the target of the local distribution schematic. Now, mind you, I literally said, I can find the text message in my Discord. I literally said, thinking gold can run lower. Here, let me copy and paste that for you guys. Boom. Thinking gold can run lower. That's why I wanted to partial. That was at 14:17 my time. We're not even there yet. Like, let's extend it. Yeah, so we hit the target, right? 14:17. I said I wanted to partial, but I was on MetaTrader. And on MetaTrader, you can't partial because I only had one position left because I never added the position back because I wasn't aware of the break. So I'm thinking gold can run lower. That's why I wanted to partial. And then right when I took my take profit, because I had to, because we were at the range lows, this happened. Oh boy. I was dying. I was dying, okay? I have the screenshot right here. Yeah. I have the screenshot right here for you guys. The image is way too large. Oh. Can I just do this then? Yeah, right here you can see. So if we zoom in, okay, if we zoom in, you can see I shorted right here on the break. This was your model 1. This was your 1. Can I make it red? This was your 1. This was your 2. This was your 3. I shorted on the break right here, which is this circled area. Then I took the TP here at the lows, and then I took the TP right here, you know, just so you guys know I'm not capping. And then we just absolutely smashed lower, which is something I expected, but because of poor trade management, I really left a lot of gains on the table, okay? I made like 1%, but I really left a lot of gains on the table because this could have been like a 3 to 4% gain. So in general, I just shouldn't have taken that. I shouldn't have taken that TP right there, because if I didn't take the TP there, I could take my TP1 right here and still have a position open, okay, for the move down, just a runner position. However, in my defense, this was looking like it was going to sweep higher, and that's exactly what happened. I just had to get my re-entry right here on the break, and I didn't, okay? I think I was like showering, and I came back, and then I just had a stop loss limit order, or a stop loss alert and a take profit alert, not paying that much attention to what's happening in the meantime, but I should have, okay? I should have, and that's on me, right? That's on me. And that's why I also said in my journal, stuck to the plan. No, I didn't stuck to the plan because I took a partial, which was not the initial idea behind the trade. I shouldn't have taken a partial right here. That way I would have one TP right there, and I could have left the other one running. But I should have also paid a bit more attention to what was happening inside of the range, because then I could have added my TP partial back right here and make like twice the money. Literally twice the money. So the confirmation was the Model 1. It had the potential to go lower because we were in a bigger it had the potential to go lower because we were in this bigger distribution schematic where you have your 1, you have your 2, you have your 3, and this could just be the lower high, making it like a more rounding top. Let's make that better, like a more nice rounding top. And I just shouldn't have taken that partial TP, okay? Because as I said, I'm looking for that lower high. Mind you, I still have a position running. I still have a position running all the way from right up here. Literally this high right here. That was from yesterday's post-trading analysis video. I'll explain right there. But that one is still running because in general, I'm looking at this as a lower high for a lower low. Okay? And I do think if we take that low, we will have a fast move towards the 2,340 area. Okay? So, yeah. It was a nice distribution. We literally predicted this price action right here, like an hour before it happened. And then we got the short confirmation again using Wyckoff right there. The only less good part is that you already took the range low, so you had a less good of a target. And then I fucked up with my partial TP, and it was just poor trade management, leaving a lot of money on the table. Okay, so I made 1%. It could have been 3 to 4, but I'm just going to be completely honest. I didn't stick to the plan because the partial TP, it wasn't in my initial plan when I entered the trade. I just took it based on what I was seeing, you know? And what I was seeing was right, but then in that case, I should have paid more attention to when price was right here, because on that break, I should have entered my TP back and more, okay? So that was it for today on gold. That was it for it today on gold. I'm still running that short from right up here, and I'm not taking profit on that position until we hit 2,340 and then 2,280, okay? Because I'm talking about this massive distribution schematic with your 1 tab, your 2 tab, your 3 tab, and then your lower high. Now, talking about Bitcoin, there was a nice little trade today on Bitcoin, okay? Actually, you could have taken 2 trades. So, on Bitcoin, we had the move. Let me check if everything is going right. Yeah, everything was going okay. So, on Bitcoin, right, we were basically trending up from the low up, okay? Just like this. Now, in that scenario, right, you can pull your range from the top down because you are in an uptrend. And then you would have something like this. However, locally speaking, you also have a downtrend. Lower high and lower low, right? Let's make that red. So obviously on the bigger time frame, you're trending up, but locally in this retrace, you're trending down. So that could mean that this is also its own little range. So if we neglect the bigger range right there, this could be its own little range. And then when that happens, you deviate the low and you come higher, and then you get this. Okay? And if you look at this right now, already some bells should start ringing, because what happened is this was your initial range low, this was your initial range high. You had some deviations at the low, which kind of looked like its own little 1, 2, 3 Model 2 accumulation schematic. But you had your deviation 1, you had your deviation 2, indicating a Wyckoff Model 1 distribution. And right here, you got the break. It was a terrible break. So I wouldn't have shorted this break yet, but you got the break. You came back for supply right here, and then you got the second break. And this is where you could have entered, okay? This is where you could have entered right here on this break. You put your stop loss above the high, and then you target the low, okay? Because the low is the target of the distribution schematic. Now, I would have preferred, guys, I would have preferred for sure if we could have taken that high, because it was also your Asia high, okay? But it happens all the time where, you have some sort of Asia high, and then pre-London takes that, and then London opens, and it takes the pre-London high. So it's like you have some sort of Asia high right here, pre-London takes it, and then London takes pre-London. Like, it's very significant, or it happens all the time. It literally happens all the time. So London opened, went higher, broke structure back inside, and you dumped down, taking these pre-hour lows. So this was a Model 1 that was valid, and it was actually traded by my boy Franzo. He nailed this trade. Let me show you what he said to me. I wasn't on time for this trade, but right here, he posted this in advance, talking about that 1 minute break right there. You see the 1, you see the 2, you see the 3. That's the 1, that's the 2, that's the 3. This is your little break of structure on the 1 minute I was just talking about right here. He's talking about this break right there. And then that's where you could have entered. And he absolutely nailed this trade. So shout out to Franzo. Now, the other trade is a trade I like to go over because it shows a distribution failing. Okay? It shows a distribution failing. After we broke down from the range that had that Wyckoff Model 1 distribution, okay, we started yet another range. And it looked something like this, okay? This was your range. You had your range low. Oh. You had your range low, and you had your range high. Oh, man. My computer is absolutely getting overheated. My computer is getting overheated. I need to turn this AC on. Let me check, guys. I need to turn this AC on. My computer literally gets overheated because it's so hot inside, and then it has no proper cooling off system, and that's why it happens. It's not just like my own PC fault, but the cooling down system on my PC is not good, so it needs like cooling from the outside. So when I don't have that, my PC literally gets fucking frozen. And it's like encoding overloaded is the signal that I'm getting. So Hope this gets fixed soon. Just listen to my voice, okay, and ignore kind of the laggy charts. But you had your range low, you had your range high, indicating with the first two red dots. Then right here, you get that first deviation, and then right there, you get the second deviation. Now, I'm already on the 2-minute time frame, so you guys should know that the distribution only gets confirmed if we break structure from the lowest point towards the highest point between tap 2 and tap 3. And as you can clearly see, there is no good market structure to wait for, because on a lower time frame like the 1 minute, there is no structure in this entire move up. Damn, that's laggy as fuck. One, we have this 1 minute supply zone. We have this 1 minute supply zone right here, and we got the break. We got the break coming into the supply zone. So this could have for sure been a trade, because you're trading the extended Wyckoff Model 1 that went over into Model 2. So now you need to see, okay, what is the rule for a third tap of the Model 2? It needs to grab extreme supply or extreme liquidity. Well, we grabbed extreme supply and we got the break for the confirmation. So this could have for sure been a trade for you guys. This could have for sure been a trade, and I wouldn't be mad if you would have taken this. I didn't take it because I wasn't behind the PC, okay? Now, this obviously failed. The thing is, price was really tightening up. It was really tightening up because, as you can see right here, we have no support below us. Like, we can just see price going higher and higher and spending more and more time in that upper section of the range, really leaving this trend line of liquidity below. And it's really tightening up. And what did it do? It took the high once more. So if I extend the high towards the new high right here, oh, it's already fixed. Okay, it's fixed. Now, what happened is price came up one more time. So price came up one more time. And there wasn't really a reason why, because already on the left right here, that third tap also mitigated this 1 minute supply zone. So we had this 1 minute supply chain. There wasn't really a reason for price to go up one more time. You got your break of structure confirmation right here, but price just tapped into demand and went higher. And it took the high one more time, and then we broke structure back inside again, right here, right? So this is a situation where you have to take the loss to make it all back and even more, okay? So instead of trading this as a Wyckoff when you take the high once more, you can just trade it as a deviation setup, right? Because price is really tightening up. We took the high once more. We broke structure back inside. There's nothing but liquidity below us, meaning it will be a fast move. So this is a typical situation where you would get stopped out on the Wyckoff and then you make a 1% loss to make it back on a 3% gain. So this would literally be it, okay? So the Wyckoff distribution failed, okay? It went higher, it took the high once more, not really having a reason to take the high once more, but sometimes it just does, right? But then afterwards, it immediately broke back inside, and since there's nothing but liquidity below, it would be a fast move down. So you'll lose 1% to make 3. Having a total net gain of 2%. So I also want to open your guys' mind that these Wyckoff distributions can fail. But I want you to understand that if you execute this trade, right, on a massive sample size where you have the Model 1 that goes over into a Model 2 and it grabs extreme supply and you enter on the break and you have the liquidity below, you know, if you take those setups with a sample size of 100 trades, you will have such a good win rate and you will make so much money. The thing is, you just have to consistently execute it. Okay? That's just it. So if you saw this today and you were like, why does this not work? Guys, sometimes it just doesn't work. don't be all too beat up about it. Most of the time, if it doesn't work, there was a reason to come higher, meaning there was supply remaining that price needed to mitigate. But even in this situation, there wasn't. There wasn't. So if you took this trade and you took the L, that's totally fine. Because if you take this trade 100 times, you will win at least 70 plus. Literally. Even 80. If you do it correctly, even 90. Okay? So this is a situation where it just stopped you out. You have to accept that. And then you break back inside. And now you can just see it as like an exhaustion trade where, right? It can just be an exhaustion trade where each high and the break of each high gets less and less. And it's like the most tiny break ever. You break back inside. You only have liquidity below. And you just trade it as a range deviation play and not particularly a Wyckoff. Okay? So just a situation where it fails because I want to show you guys that it also fails sometimes, right? But if you execute it on very significant POIs, you can make Wyckoff 100% win rate strategy, like at least 99%. Literally, you can make it a 99% win rate strategy. You would just take less trades and only take the very, very, very high probability ones in high probability areas on the chart. Right now, we're on the 1 minute, right? So it's always a bit more risky, but I'm just showing you that it does work, okay? It does work. So that's it for me, guys. We took the trade on gold. I'm still in a massive short from here. So I'm in a short from here. That's still open. We took the trade here based on the Wyckoff schematic that we got. And because of poor trade management, we only made 1%. Well, we could have made it like 4 at least, okay? And then on Bitcoin, you had 2 trades. I didn't take this one because I wasn't awake for it because I was up till 4 in the morning to make that crypto market update video for you guys. And I wasn't behind my PC for this one. But literally, if I was behind my PC for this trade, I would have taken the L right here and then took the next trade and made 3%. Like that's how I would have executed it. So I would have taken the L and then I would have taken the W. Okay? So that's it for me, guys. Hope you enjoyed this post-trading analysis. If these schematics and my explanation may seem a little bit more complicated than usual, it's because sometimes some more advanced stuff is necessary to elaborate and explain all the charts. But I will go about most of my advanced techniques into the Wyckoff tutorial part 2 that's coming online tomorrow. Okay? So in general, Wyckoff can be traded very simply. Don't let this video confuse you. If it did, and if it did confuse you, I highly suggest you watch my video tomorrow talking about the more advanced stuff. But first, get to the basics. Like these are just basic trades with a 1 tap, a 2 tap, a 3 tap, and then the break of structure. So I love all of you. If you're watching till right now and you're listening to my voice right now, you're all going to make it because you watched throughout the entire video to see if I have some golden nuggets left and right. And if you've watched till this point in the video,